Welcome to Part 3 of the Ohio Residential Statewide Purchase Agreement explanation. In this section, we'll be identifying lines 256 through 377 of the document. Line 256, number 13, taxes and assessments. The real estate taxes for the property for the current year may change as a result of the transfer of the property or as a result of a change in the tax rate and valuation. Buyer and seller understand that real estate valuations may be subject to retroactive change by governmental authority. Line 259, seller shall pay or credit at closing. Line 266, letter A. All taxes due and owing and community development charges for the year of closing shall be prorated through the date of closing based on a 365-day year. The proration shall be based upon the most recent available tax rates, assessments, and valuations as reflected in the current tax duplicate certified by the county treasurer. That is considered the long proration method. Letter B. Line 263, all assessments which are a lien on the property as of the date of closing. Letter C, all agricultural use tax recoupments for years prior to the year of closing. Letter D, all other unpaid real estate taxes and community development charges imposed pursuant to Chapter 349 of the Ohio Revised Code, which are a lien for years prior to closing. Lines 267, bold font. Seller and buyer acknowledge that actual bills received by the buyer after closing for real estate taxes and assessments may differ from the amounts prorated at closing. In any event, all prorations agreed by the parties at closing shall be final. Line 269, these adjustments shall be final except for the following: none if nothing is inserted, or add something that the buyer may be requesting. Line 271, this area does not apply to our area of Northeast Ohio. It's considered the short proration method, and it does not apply to who we are. Let me read the annotated version of the box. In Ohio, property taxes are paid in the arrears. For example, in Franklin County, tax bills incurred for the period January through June 2022 were mailed out in late December 2022 and were payable on or before January 31st, 2023. This means that buyers will receive a tax bill for a period of time which they did not own the property. As a result, the property taxes are typically settled at closing using a tax proration method. In most areas of Ohio, transactions use a 365-day year proration, known as long proration method. That's where we are in Northeast Ohio. In some markets, most notably Montgomery and Lucas counties, local custom and practice dictate the taxes are prorated using a 6-month short tax proration. Buyers operating out of their local market are encouraged to ask a broker or title agent in the market where the property is located about the local custom or for tax prorations. Line 275. This area talks about community development, which in our area is also considered an HOA for a condominium property. Line 275, the community development charge, if any, applicable to the property was created by a covenant in an instrument recorded at, insert the county on line 276, the volume, page number, or instrument number. 277, note, if the foregoing blanks are not filled in and a community development charge affects the property, this contract may not be enforceable by the seller or binding upon the buyer pursuant to Section 349.07 of the Ohio Revised Code unless the above recording information is provided by the seller in a counteroffer. Note, community development charges are fees associated with the development, acquisition, construction, operation, and maintenance of a certain development. Community development charges are common in some areas of Ohio, often in new suburban communities. Typically, information regarding the applicability of a community development charge to the property is available through the county auditor. Brokers are encouraged to contact a local title agent or real estate attorney if they have any questions. Line 280. The seller warrants that no improvements or services, site or area, have been installed or furnished, nor notification received from public authority of any future improvements of which any part of the cost may be assessed against the property, except the following: none if nothing exerted. This is where a seller would make people aware that if they live in an area with a septic system, but they've been notified that city sewers are coming, it would be added there. Again, this is a unique situation, but it's good for the sellers to note when you're working with a seller or you're pointing it out to the listing agent that if the seller is aware of anything, that's where they would write that. Now on 284, this is a little bit different than what we're used to. I'm going to read through it and then we'll address it. Number 14, Owners Association. If the property is a condominium unit governed by a condominium association or is located within a community governed by a homeowners association, the seller shall provide the buyer with the following information and documents within blank days, 7 days if left blank, after the date of acceptance of the contract by all parties. 287, any declaration and or deed restrictions and bylaws of the owners association, condominium or homeowners, including all amendments to the declaration or deed restrictions or bylaws, except amendments that only increase the number of units or homes. 289, association board, management company, contract information, name, phone number, email. 290, contract information for any other mandatory membership association, if applicable, name, phone number, and email. 291, a statement from the association regarding this home or unit confirming when the next association fee and any assessment payment is due, how often such fees, assessments are paid, the amount of such payment, the amount of any pending special assessments, whether the account is current, the amount of any additional mandatory fees or shared amenities or common elements, if applicable, and whether there are any pending lawsuits against the Owners Association. Line 295, a statement from the seller certifying to the best of the seller's knowledge the existence of any assessment not yet levied or any violations affecting the property, the association initiation fee, reserve contribution, association transfer fee, and whether there are any pending lawsuits against the Owners Association. Line 298, minutes from the last 3 meetings of the directors or trustees of the Owners Association. Line 299, minutes from the last meeting of members of the Owners Association. Line 300, most recent version of the unrecorded rules and regulations. Line 301, current financial statement showing the nature of the association's assets, including 1, most current balance sheets, income and expense statements, and budget, and 2, a copy of the most recent reserve study. Line 304, percent of condominium units owner occupied if applicable. 305, the declarations page of the master insurance policy on the development. Line 306, any available inspection, engineering, or other certification reports completed within the past 5 years. Line 307, the review period. The buyer's obligations are contingent upon satisfactory review of the documents requested above. If the buyer is not provided some or all of the requested documents or is not satisfied with any of the requested documents, buyer, as a buyer's sole remedy, may deliver a written notice of termination to the seller, and the EMD shall be dispersed pursuant to paragraph 6, earnest money. Bold font, buyer's failure to deliver the written notice of termination within 7 days of the receipt of the requested documents or 14 days after the date of acceptance of the contract, whichever occurs first, shall constitute a waiver of the buyer's right to terminate this pursuant to this provision. This provision does not limit the buyer's right to object to matters set forth on the title commitment. Now let me read the notated section there. Paragraph 14 only applies to properties subject to an owner's association, such as a condominium or homeowners association. Seller's broker is encouraged to discuss association documents with the seller early in the process. This paragraph is drafted to create an obligation for sellers to provide important association documents so the buyer can determine key information pertaining to the association and to the property, such as solvency, upcoming assessments, and rules, regulations which may impact a buyer's decision to purchase. buyer will have 7 days to review and provide a notice of termination, or 14 days after the date of acceptance if the buyer has questions with respect to the documents. It is recommended they consult with an attorney. Now, starting again up there at line 284, this section literally replaces the condominium addendums that we used in the past, which with much more language involved. If you're a listing agent in our brokerage, I encourage you to bring this with you on a listing appointment or the first time you're going to meet a homeowner, if they're getting their condominium unit ready, to make them aware that they could very well be asked by a potential buyer for any or all of this information, particularly in the area with how many days they have to get this documentation. I would encourage you to be familiar with the turnaround time for some of these associations to make sure that you have enough time, if it's your buyer or your seller, to get this information when you're going under contract. As a broker of this office, I would like you to note here that what this document does is this turns the responsibility of the gathering of this information to the buyers and the sellers, not to the real estate agents. It is the real estate agent's responsibilities on both ends to pass the information back and forth to the buyers and sellers as requested, but in no means are you responsible to get this information, obtain this information on behalf of a seller. And as the broker of this office, I am now requesting that you do not do that. I know that we're all very service oriented, but here the language specifically states that it's the buyer and seller's responsibility to get the information. Again, it's only your responsibility to pass what is requested. I have seen in the past where our office, who is so helpful to each other, will put a word out there, does anybody have the decks and bylaws for a specific condominium development? I'm asking that no longer takes place. We cannot be guaranteed that those decks and bylaws we're passing are the most current, and in this instance, it is the responsibility of the seller to make certain that they're getting the most current information for the property that they own and that they are attempting to sell. Thank you. Okay, now we're moving on to line 313. And on 313, it discusses number 15, utility charges, condominium owners association charges, interest, rentals, and security deposits. Line 314, 15A. Through the date of possession, the seller shall pay all accrued utility charges as well as any other charges that are or may become a lien on the property. Line 316, 15B, if the buyer is assuming any mortgage, the interest shall be prorated through the date of closing. Line 317, number 15C, if the property is subject to a lease, the rents shall be prorated as of the date of closing, and security deposits shall be transferred to the buyer. Keys, rent rolls, security deposits, and a copy of all leases will be provided to the buyer no later than closing. Any further terms are set forth in the rental property addendum. Parties shall initial if attached. On note, Ohio Realtors provides an addendum for use in transactions involving a property which is subject to a lease. While not required to be used, it is highly recommended. Additional terms or conditions shall be prepared by an attorney representing a party. So under 319, your party could initial this because we do have this document. It is in our form set, and I would encourage you to always use it while doing a property that has a rental unit. Line 320, 15D. At closing of a property, which is a condominium or subject to a homeowners association, condominium, or other association, periodic charges shall be prorated through the date of closing. Buyers shall pay all initial reserves and or capital contributions that are charged by any owners association, condominium, or otherwise, in condition with the sale or transfer of the property, as well as any fee associated with lender or title company required document costs. Seller shall pay all other fees that are charged in connection with the sale or transfer of the property, including without limitation all transfer, processing, expediting, delivery, statement, or management company fees. Note, paragraph 15D includes important division of expenses that may or may not arise in the course of a transaction. Brokers should discuss these expenses with their clients to avoid confusion or disagreement. An example of this in 15D would be there are some homeowners associations that do charge to transfer ownership names. There are some condominium associations that do charge to receive their bylaws, their decks and bylaws. So that's what lines 320 through 324 address. Line 325, deed and conveyance, 326, 16A. Closing services will be provided by name of title company if known. This is the second place that I mentioned there would be a spot for the title company to be added, and to please make certain it is the same title company in both areas. 327. The parties agree to execute all documents required by the closing or escrow agent at closing. Seller shall be responsible for transfer taxes, Owners Association transfer fees, conveyance fees, deed preparation, settlement fees chargeable to the seller, the cost of removing or discharging any defect, lien, or encumbrance required for conveyance of the property as required by this contract. 330, 16B. The seller shall convey to the buyer marketable title in fee simple by transferable and recordable general warranty deed with release of dower, if any, or fiduciary deed as appropriate, free and clear of all liens and encumbrances, and accept the following. Line 332, letter A. Those created by or assumed by the buyer in writing. B. Those specifically set forth in this contract. C. Zoning ordinances. D. Legal highways. E. Covenants, restrictions, conditions, and easements of record that do not unreasonably interfere with present lawful use. And F. All timber, coal, oil, gas, and other mineral rights and interests previously transferred or reserved of record. Line 338, 16C. The seller warrants that during their ownership they have not transferred, conveyed, leased, or reserved any timber, coal, oil, gas, or other mineral rights or interests in the property, considered rights or interests, nor does the seller have any knowledge of any prior transfers, conveyances, leases, or reservations of any rights or interests except those of public record, and the following, none if nothing is inserted. Line 342. Unless otherwise set forth in this contract, the seller warrants that they will not transfer, lease, or convey to any third party or reserve for themselves rights, interests, except to the buyer as set forth in this contract. Buyer is advised that seller may not be fully aware of the true extent of the ownership of such rights or interests. Buyer is further advised that the title search customarily performed for the transfer of real estate is a 40-year marketable title exam. This title search does not guarantee or determine the ownership of the rights or interests, which would require a specific title search by qualified professionals searching back to the 1800s or earlier. Buyer is encouraged to obtain a title search to determine the ownership of such rights or interests if concerned about this issue. Broker will not provide legal advice concerning the rights or interests in the property. Note: oil and gas interests have become a subject of concern among real estate professionals since the rise of oil and gas extraction using hydraulic fracturing processes, fracking. This is particularly true for rural properties located in parts of the state with active oil and gas exploration and drilling. This provision obligates the seller to disclose their knowledge regarding oil, gas, and mineral interests, but does not obligate the seller to provide a warranty of title regarding such interests. Parties with questions with respect to ownership of such interests should consult with an attorney. Line 349 is the area where you make the deed to, who will be in the title to this property. That's what 349 is. Line 350, 16E. In the event of title defects, prevents the seller from conveying marketable title on the date of closing, the buyer and seller mutually agree to extend the closing date by blank days, 7 days if left blank, to resolve the title defects. Buyer may either accept the title defects and close on the date provided in paragraph 20, closing, or terminate this contract by providing written notice to the seller. Upon termination, EMD shall be dispersed pursuant to paragraph 6E, earnest money. Note, paragraph 16E provides the parties with the ability to automatically extend the closing date of the contract to resolve title defects in order for the seller to convey marketable title. If the number of days inserted is 0, then the contract must close on the date provided for in paragraph 20. Buyer has the option to accept the title defects and close or terminate the contract by providing written notice to the seller. Line 354, Section 17, Title Search and Insurance. Title insurance is designed to protect the policyholder of such title insurance for covered losses caused by defects in title ownership to the property that are in existence on the date and time the policy of title insurance is issued. Title insurance is different from casualty or liability insurance. The buyer is encouraged to inquire about the benefits of owner's title insurance from a title insurance agency or provider. An owner's policy of title insurance, while not required, is recommended. A lender's policy of title insurance, if required by the mortgage lender at an additional cost, does not provide the protection to buyer, and buyer acknowledges that it is the buyer's sole responsibility to make inquiries regarding the benefits and types of owner's title insurance prior to closing. Select one. So in this instance, we as a brokerage are going to make these recommendations to you, and you'll take it from there. So under line 359, buyer selects an Alta's owner's policy of title insurance, which is standard, or selects an Alta title homeowner's policy of title insurance enhanced. You will want to choose one of those two options for your buyer, and I'll come back to that. On line 360, if title insurance policy and title search are selected above, the cost shall be paid as following. We recommend line 363 to check the seller shall pay 50% and the buyer to pay the balance of the cost. Line 364, seller's contribution to the premium of title insurance cost shall be in addition to the seller paid settlement charges in paragraph 5, settlement charges if any. And then please note this section, because of variations in local practice regarding the handling of title insurance policies and purchase contracts, the parties are provided options with respect to the type of title policy and payment of title policy. ALTA refers to the American Land Title Association, and its policies are used throughout Ohio. It is strongly recommended that seller's broker provide the fully executed contract to the respective title agent as soon as possible following the date of acceptance. Questions regarding the choice of benefits of a title insurance policy should be directed to a title insurance agent. I would just like to recommend at this time that the title company that you choose to work with on a regular basis, that you contact them and have a conversation with them about the section and about prorations. The Ohio Real Title and Title Professionals, which are Venture Title, have been in training with us in our brokerage for months on this. They have a handout regarding recommendations. I would encourage you, as an agent of our office, to reach out to the title rep that you have a relationship with and have a conversation with them regarding the statewide purchase agreement and anything pertaining to title. Again, those two companies I'm aware of are very well trained, and I'm hoping all of the others are also. Okay, moving on. Line 366, property survey. Line 367, 18A. If a buyer or buyer's lender requires a current survey, such survey shall be paid by the buyer. If a new survey and legal description are required by a local governmental authority for the property to be conveyed to the buyer, the seller shall provide and pay for the new survey and legal description. That is common in some counties, just so you're all aware. Line 369, 18B, the buyer's performance of this contract is or is not contingent upon a property survey confirming the location of the existing boundary lines and or the location of the improvements upon the property relative to such boundary lines, setback lines, and or easements. The buyer has blank days, 14 days if left blank, from the date of acceptance of this contract to complete the survey and to sell the seller written notification of termination if the buyer failures to deliver such written notice. This contingency is waived. Note, in paragraph 18 addresses situations in which a new survey and legal description are required in order for the seller to transfer title. The typical mortgage location survey ordered by lenders remains the obligation of the buyer. However, if a local government requires a new survey and legal description, the seller is responsible for providing payment of those costs. Paragraph 18B provides the buyer an option to make this a contract contingency. Just so you know, this area was added because buyers often believe when their lender requires a survey that they are getting a boundary survey. That is not true. They're only getting a site survey. So this area of 369.18b points out to a buyer they do have the right to have a boundary survey. It's an additional cost, and it's a good conversation point for you to be having with your buyer so they understand the differences and choices that they have. Line 373.19, Foreign Investments in Real Property Tax Act, FIRPTA. If the seller is a foreign person, as designed by FIRPTA, Section 1445 of the Internal Revenue Code, the buyer is required to withhold 15% of the amount realized by the seller on the transfer and remit the withheld amount to the Internal Revenue Service, unless an exemption or reduced rate of withholding applies. If withholding is required, Treasury regulations require the seller and buyers to provide their U.S. federal tax identification number on all filings. Seller and buyer instruct the escrow title agent or legal representatives to prepare, execute, and deliver any documentation reasonably necessary to comply with FIRPTA requirements. Note, paragraph 19 addresses FIRPTA, a federal tax law which involves foreign investors investing in real estate. FIRPTA has become an issue in Ohio, particularly in larger markets, as we've seen a substantial influx of non-U.S. citizens investing in real estate. Sellers' brokers should ask all of their clients whether they are U.S. citizens or, if not, permanent residents holding a valid green card at the time of listing the property. If the answer to both questions is no, then the seller should be referred to an attorney or tax professional, and the seller's broker should notify the title agent as soon as possible. That's something new that we haven't really experienced a lot of. However, I strongly encourage you to discuss this with your sellers when listing properties in our brokerage. This concludes part 3, and we'll end here, but I'd also like to reiterate again that this recording is usage for our brokerage, Keller Williams, Greater Cleveland Northeast, and that if any of you are utilizing this training for yourself or your brokerages and you have any questions regarding your own company policy and or how to handle situations, please refer to your own broker or manager to answer those. Thank you.